Interestingly, when we do study the healthcare trends around the world, we once again pick up the same thing that people start spending a lot on their healthcare as income levels increase.
Right.
The easiest example and the best example I can give you for this is, the diagnostics sector,
Yeah.
where people today would actually go and get a full body checkup done at least once a year. Some
Yeah.
people do it even twice a year.
Yeah.
Just go back to your father's generation or your grandfather's generation. Nobody would ever do a full body checkup, at any frequency.
Yeah.
People would visit the doctor, who would, and they would visit the doctor only when they were facing some kind of an illness. And the doctors back in the day, since I am of the 70s vintage, I can tell you the doctors back in the day will also not do the test immediately. They had unique ways of making you open your mouth, look at your tongue. Doctors would look into your eye, whether it's yellow or it's fine. They would look at your nails and then do the preliminary diagnosis and then give the medicine. Most of the times you'll get cured. If you didn't, then they would say that, okay, at such and such hospital, you need to go and do your tests. So that was how, healthcare was being administered. Now, if you go to any doctor, the first thing he says is, okay, I'm giving you a medicine which will provide you relief for the next couple of days, but come back to me with all these tests.
Yeah.
So both as a preventive...
This is why my parents, who are 60 and 70 years old respectively, they say that hospitals are just there to loot your money these days. They'll just tell you to do all of these tests to make you do a big bill.
so maybe they're not too wrong, but look, once again, this is how the society is evolving. If people have the money, they don't mind spending it on these tests because they just want to be sure about their health. So again, this is not something unique happening in India. We've seen how this has evolved in countries which have been 10 years or 20 years ahead of us on the curve.
Yeah.
And this is what we are seeing has already started happening in the country in the last, I would say, 5 to 10 years. So we are positive on healthcare. We are positive on diagnostics as a theme. We are positive on hospitals. People don't want to go to government hospitals at all. When is the last time you went to a government hospital? When is the last time any of your audience would have gone to a government hospital? I mean, none of us have.
Yeah.
So people we're very happy going to private hospitals. Most of us have a medical insurance, so we get reimbursed as well. So hospitals is going to be a very big business. And I would say pharmaceutical is also a big opportunity because, apart from what we call as medicines to solve for your acute illness, we also are seeing this increasing trend of people now starting to consume a lot of vitamins which can keep them healthy. Plus with the chronic diseases, the instances of chronic diseases also increasing. People are now also I would say taking these chronic drugs on a daily basis. So the spend towards pharmaceuticals is also on a rising trend. Yeah.
So you've not mentioned defense, which has been like a very, very talked about topic in India in the last couple of years. How come no mention of defense as a sector?
So defense certainly is a sector where once again there's a government push. There are two things which are keeping us worried on the defense sector as of now. One is the valuations. These companies have gone through the roof in terms of valuations. If you look at their valuations today compared to the last 10-year history, you know what I mean.
Yeah.
The second thing is, look, the defense sector is at the mercy of the government one way or the other. It's a sector which is the exact opposite of a monopoly. A monopoly is an industry where there is one seller and there are thousands of buyers. The defense sector is something which I call as monopsony. In the economics textbooks, there is a concept of a monopsony where there is only one buyer but multiple sellers. The buyer here is the government. Of course, these companies are also trying for exports. I'm not denying that. But predominantly 70 to 80% of all that they produce is going to go to one buyer. And therefore, you're at the mercy of that buyer in years when the government says that our spend on defense this year will remain muted. It will be a bloody blow for them. Please don't underappreciate the power of the government in terms of elongated elongating the working capital cycle of these players. We've seen it many times in the past for both companies like HAL and Bharat Electronics when the government refused to make payments to them for 8 months, 9 months, 12 months because the government said our finances are stretched. Many of these companies actually had debt on their balance sheet because they had to fund their working capital because the payments were not coming from the government. So, in a monopsony industry, the one client holds a lot of power. Having said that, I do appreciate the fact that defense is a sector where the government is pushing a lot of local manufacturing. But at this present juncture, given where the valuations are, we are cautious. Yeah.
And if I look at the fund fact sheet, and there are almost 50 plus AMCs, I've seen that the one of the biggest sectors is always financials. You did not mention financials. What is the story behind that?
Maybe I didn't mention financials because it is one of those sectors which is very obvious, and that therefore I wanted to concentrate on ideas which are still not so obvious in the minds of investors, but can be really big going forward. Look, financials is a well-discovered story, which doesn't mean that the sector has gone X growth. The sector still has a lot of juice left in it, a lot of growth left in it. But I would say that the growth rates for the entire sector will certainly come down compared to the last 10 years.
Which is what I wanted to understand, right?
So if you look at, the biggest driver for the bank. So what's the biggest part of the financial services sector? It is
Lending.
The banks, which is lending essentially. Now, if you look at the credit growth in the country, it used to be 16% at a point of time. Today, the credit growth is 12%. The last few years, the credit growth was single digit.
Why?
So,
because India is still a credit hungry nation.
India is still a credit hungry nation, but there are a few things happening. Look, when you talk about the banks, it's not just retail lending, it's also corporate lending. Corporates are flush with cash right now. They've all raised a lot of money in the last few years. They've raised money from the stock markets. They've also raised, QIPs. Their own cash generation has been very strong. So when you look at the net debt to earnings or net debt to equity, for corporate India, you would see that this figure has been coming down, which means that corporates really are not very hungry for credit right now. That's one part of it. The second thing is that the credit is still under-penetrated in India, especially when it comes to retail. As consumption grows in the country, a lot of retail financing will also keep happening. But possibly at the size and scale at which the Indian banks are today, it's difficult to grow at 20-25%. The system level credit growth is also not growing, like I said, in mid to high teens. Therefore, growth rates one way or the other
will certainly
system
level credit,
which means total credit growth in the country.
Okay.
That number used to grow at 15-16% 10-15 years back. That number is expected to grow at just about 12-13% now. Okay. So at the aggregate level, at the system wide level, this number has tracked down. And because all of these banks are fairly big now, whether we talk about HDFC or ICICI or SBI or any of these other banks, they can't obviously keep growing 5-7 percentage points higher than what the system itself is growing.
So then why is still 20 to 30% of allocation of most of the AMCs still in financials?
So one is that, these are still very, very big opportunities. Mind you, even if they grow at 14-15%, that's not a bad number.
Yeah.
India's nominal GDP growth is expected to be this year at 10%, but this year inflation is still expected to be low. Even if inflation increases, India's nominal GDP growth will be maybe somewhere between 10 to 12%. If you are able to grow at 15-16%, which is 3 or 4 percentage points higher than the normal GDP growth, it's not a bad outcome. Plus, these are very, very solid businesses, tried and tested. So I would say that, the size of the opportunity in future, plus the growth rates that are expected to persist, albeit lower than what they used to be a decade back, are still healthy.
So basically, it's better risk-adjusted returns than the other sectors that you spoke
That's the last part. Absolutely right. In terms of valuations, the big banks are trading at, extremely attractive valuations. While the markets are trading at a premium to long-term averages, the banks are actually trading at either at their long-term averages, in some cases even at a discount to the long-term averages.
Interesting.